Southeast Radio's Business Matters with Karl Fitzpatrick.
Well, inflation and housing supply are two of the most prominent issues facing the Irish economy right now. But what is the outlook for the remainder of the year? Kate English is the Director and Head of Real Estate Research at Deloitte, and she joins us now to tell us what may lie ahead. Kate, before we delve into the prevailing economic issues, I'd like to get an insight into your own career and your role with Deloitte.
Good morning, Karl. Early years in education, my undergrad and both master's degree from University College Cork are in economics. I went on from University College Cork to do a brief stint in the European Parliament, an internship there in the finance division or finance department, but quickly realised that economics was really more so where my heart lied. I came back from Luxembourg, where I was based in the European Parliament, and did a stint with Sherry Fitzgerald as an economist and a real estate researcher there. Was there for a number of years before moving into Cushman & Wakefield, a commercial real estate global firm, where again was their chief economist and head of real estate research. And then more recently have joined Deloitte as of December last year as a role of director and head of real estate research. So you'll hear from a lot of my wordings there that the property, real estate, be that residential or commercial, has played a huge part in my career to date. But we cannot ever speak about anything in property without fully understanding everything that is happening from an economic standpoint as well.
What is your own sentiment regarding the current business environment and the challenges that businesses face today?
I think it's a very challenging environment at present. And I think that is because there's so much happening, both on a domestic and an international or external front also. And we are seeing a range of data points that are coming out that often can be quite contradictory and therefore can be difficult for businesses and individuals to get their heads around, to understand what is really happening within the economy and within the business environment. We're seeing that, yes, on both a consumer and a business front, that sentiment has been impacted over the past 12 months. And I do think that is, again, driven by that large uncertainty that is there, and certainly the growing risks which have been within the market over the past 12 months. We've seen, as you know, quite a substantial rise in interest rates, be that from the ECB, so here in Europe, but we've also seen it in the likes of the US, Canada, the UK. And all this has led to many questions as to what is the impact on the cost of debt, what is the impact on balance sheets, both personal finances and again business finances, and what does that mean for overall our economic outlook. Within that, though, we also see that companies are looking to try and get their heads around topics that are much so forward-looking. So ESG, we cannot have any boardroom conversation today without speaking about ESG and how we're going to tackle that going forward and monitor it. Similarly, with technological advances or digital transformation, which is underway, I think all listeners will be probably sick of hearing or reading articles at this stage surrounding AI, so artificial intelligence, automation, ChatGPT. But what does this all really mean for our businesses? And because of the extent of or the pace of the change in that digital transformation or that tech space, it is difficult for people to get their heads around. And I think that is the main point for people at the moment, is trying to understand, well, what are we talking about to begin with? What are the potential impacts of it? And how should I engage with those changes that are taking place?
And from a data perspective, what are the key indicators telling us about the future prospects for the Irish economy?
We have many data indicators coming out at the moment that can be very confusing for people and definitely difficult to get our head around and understand, well, what really is happening here. And I think a report that was released by the central bank in recent weeks, it focuses very heavily on the banking and financial sector, so don't worry, I won't bore you with going into that. But it's the framing that they use for this, I think, sums it up quite well. So they look at, firstly, the resilience that's evident in the economy at present, the risks, and then the policy, which I think is the future piece of it. So if we look firstly at the maybe resilience or the more positive data indicators that have come out, So we still have an incredibly strong labour market. You have almost full employment at 3.8% as of May 2023, with over 2.6 million persons now employed within the economy. That's a growth of over 4% in the last 12 months, which again, if we put it in the context of all that uncertainty which has been there over the past year, that is quite incredible. We're also still seeing very strong retail sales data, personal consumption. So despite, again, all the risks that are there, those rising inflations or cost of living which are out there, we're still seeing consumers get out and spend, and be that across different sectors of the economy. We're still seeing positive statistics when it comes to travel and tourism. I think anyone who has been to Dublin Airport in the past few months will see that. It's very tangible to see that people are back out spending again. And lastly, I suppose on that resilience part is our exchequer returns. So this is much more from that government perspective, where we can see that in the first 5 months of the year, we have data only released in the last 2 weeks for this, show that on an income tax basis, on a VAT basis, or on a corporation tax basis, that collectively in the first 5 months of this year, it's up on where it was in the first 5 months of last year. And that can range anything from up just over 9% on income tax that was collected on an annual basis to over 20% on corporation tax collected on that annual basis. So there you're positive. That would lead us to believe that the economy is still expanding, and very much so here on the domestic front. I suppose where the risks are really tied up in that inflation, the interest rate environment. We have inflation still trending very high, and people are feeling that in their daily spending. What I would say is that, yes, there are risks, or there are data points that point to risks, but there are also some very strong data points which continue to come out that show on the ground we are still showing growth. But I think we need to be wary as we move through the year as to how much those risks indicators begin to grow and feed through into those positive data points.
And Kate, inflation, of course, has been the hot topic for economists over the last 12 months. How long more would you expect that we would see predominantly high levels of inflation here in Ireland?
What we are beginning to see is that inflation, it is coming back, but it is coming back at a slower pace. And you may hear this term that inflation is becoming sticky. And we're hearing that both within Ireland and indeed outside of Ireland, if you listen to conversations again in the States or more so in Europe, that this idea that inflation is becoming sticky. And what we mean by that is that we have seen declines in, for example, energy prices over the past number of months, but we are still continuing to see price increases feed out more widely across the economy. It's still very evident in food, in your services. And with that in mind, then, we are still expected to see high inflation for the remainder of this year. So if we're to go again to the Central Bank of Ireland, their forecast for inflation has it sit at about 5% overall for this year, and decline a little bit further in 2024. So we're certainly some way off returning to inflation figures that we had pre-COVID or in the early days of COVID. And you are looking at inflation continuing to be above that 5% mark for the remainder of the year.
And of course, housing has been another contentious topic. But what is happening in the market now, and are there any red flags that we should be watching out for?
Yeah, housing continues to be a contentious topic, and I think, being honest, will continue to be so over the next 12 months. It's a very difficult environment at the moment. So we are, unfortunately, as people are probably sick of hearing at this stage, in a position where we have a imbalance between your demand and your supply. And unfortunately, that is not changing. So we did see a positive year last year in terms of that the volume of completions or new homes delivered to the market was its strongest levels during this development cycle at over that 27,000 units mark. But we are expected to see completions or over 29,000 units mark, apologies. And we are expected, though, to see it decline a little bit this year. While in contrast to that, we still have incredibly strong demand within the market. The other point I would put in there, and it's sometimes the element of the market that doesn't get as much airtime or media attention is that rental market. So we are seeing an incredibly tight rental market. And as much as we say there are supply-demand constraints within your overall housing market, it is even tighter in that rental market. So I know daft.ie produce quarterly reports on how many units are available to rent on the market. And some of those figures have been starkly low over the past 12 months. So really we have a very challenged market. I think that there are a lot of, if you were to ask why is supply so constrained? The focus, and certainly my answer would lie on its back to, number one, the planning system. I think we have certainly significant delays within the planning system that are having a wider impact within the market. We also have had quite a change in the environment over the past 12 months with interest rates rising, the cost of debt has increased, and that does impact the viability, for example, of a scheme to be developed.
And what measures should our elected representatives be taking to stabilise the issues within the housing market?
I think maybe I may be a broken record with this answer, but the really supply is the crux of the issue here. And how do we help enhance that supply? And that is supply of all types of accommodation, as I said, not just your home ownership market, but also your rental market as well. And within that, all different types of living, from your persons who are just starting out in homes to maybe that more mid-years to family life to later living as well. So what can elected representatives do? I do think there needs to be some element of looking at how do we increase the supply in your rental market? What incentives can be there to ensure that we are not losing more individual or those small private landlords, and also ensuring that we're continuing to attract international capital for your large institutional investors within that market as well, because both elements are key to supply.
And Kate, finally, I'd like to gain your insight into what your outlook is for property prices in both second-hand houses and new properties over the coming year.
A good question, and one which is obviously frequently asked at the moment. I think given all the changes which have occurred in the market over the past 12 months, and we have seen changes. So again, remember, we've seen quite an increase in your interest rates, which does have an impact on mortgages and the repayments that people need to make. And that has led to, I suppose, a change in consumer sentiment within the market and an overall sentiment when it comes to lending or cautiousness around it. However, we are still seeing strong demand. So that combined, they kind of almost cancel each other out or equal each other out. But what we are seeing, so at the moment, monthly data would show us that we are seeing prices fall back. And this is much more evident in Dublin than outside of Dublin. And that's typical. We typically see Dublin move first and what we see the rest of the country move. There's always a lag. So Dublin now has been in a monthly decline for 5 consecutive months, while your national figures just 2 consecutive months. But on an annual basis, figures are still higher. So for example, your figures in April are 2023 are still higher than April 2022. I do think that pattern, though, of a slowdown will continue as we move throughout the summer months, and that we could end up in a situation very similar to what we were in 2019, pre-COVID times, when essentially price growth was stagnant. But you mentioned a very good point in your question, Karl, and that's the difference between your new homes and your second-hand homes. That pullback in house prices is very much so focused on the second-hand market, while our new homes are continuing to see price growth.
Well, if you've just tuned in, that was Kate English, Director and Head of Real Estate Research at Deloitte, and I'd like to thank Kate for highlighting these important data points with us this morning.
Southeast Radio's Business Matters with Karl Fitzpatrick.